Welcome back to Talk Tickers. Today, we're going to do a deep dive into Five Below's Q3 2024 earnings call.
Yeah.
And, try to figure out if this discount retailer can really bounce back from, a bit of a slump this year.
Yeah, it's a great question. Their stock hasn't quite reached those late 2023 highs.
Right.
And everybody's curious about their Five Beyond concept. Those items priced up to $25.
Yeah. Is that the right move?
Is it the right move?
It's a big change from their classic, everything's $5 or less model.
Huge.
Plus, there's this whole tariff thing looming that could potentially, hit their costs.
Definitely a lot of moving parts for sure.
Yeah.
So what are you most curious about as we go through this?
Yeah.
Are you wondering if the stock's a buy now?
Yeah.
Or if this new strategy is working?
I think for me, it's about understanding if they can keep that treasure hunt vibe
Right.
while also, selling more expensive stuff.
Yeah.
But, hey, let's start with the basics. How did they actually do this quarter?
Well, they actually beat their own guidance.
Oh, okay.
Which is always a good sign.
That's good.
Sales hit $844 million, a 15% jump from last year.
Wow.
And even their comparable store sales, that's the growth at stores open at least a year, were up 0.6%.
Okay, so not a blowout, but not terrible either.
Right.
But didn't they open a ton of new stores too?
A record-breaking number, in fact.
Wow.
They added 82 new stores in Q3, bringing their total to a whopping 1,749 locations.
Hold up. That's like popping up a new Five Below every other day. That's 18% growth year over year. They're just trying to take over the world.
Ambitious, for sure.
Yeah.
But it seems to be working at least on the profit side.
Okay.
Their adjusted earnings per share landed at 22 cents, way up from 0.26 cents last year.
All right. So they're growing. They're making money. What's their secret sauce?
Right.
Did they spill the beans on the call?
Management pointed to a few things.
Okay.
They're really emphasizing getting back to basics. Trend-right products, good quality, but still at those super low prices, especially for their core teen and preteen shoppers.
Smart move. In a shaky economy, everyone's looking for a deal, right?
Absolutely.
But they're also doing more than just cheap stuff.
Yeah.
They're trying to make the whole shopping experience better.
Exactly.
Like how so?
They've increased labor hours in stores.
Okay.
So there are more people around to help customers and keep the shelves stocked.
Makes sense.
They even mentioned improving their inventory management.
Okay.
Making sure they have the right stuff at the right time without a bunch of leftover junk.
Okay. That's a big deal because overstocked shelves can kill a retailer.
Absolutely.
But hold on. Let's get back to this whole Five Beyond thing.
Right.
Are they really selling $25 candles alongside those squishy stress balls?
They are.
Wow.
And it's shaking things up.
Okay.
One of their key focus areas is actually re-emphasizing the classic Five Below price point.
Okay.
Items $5 or less.
Got it.
But they're getting strategic with it, using more $1, $2, and $3 price points, especially for the holidays.
So like luring you in with the cheap stocking stuffers, and bam, you see a cool Bluetooth speaker for $20.
You got it. Sneaky. But they're also streamlining their product selection overall.
Really?
They're aiming to reduce the number of SKUs, that's individual product types, by a potential 20%.
Wow.
Imagine the impact on their shelves.
Wait, so less stuff.
Less is more in this case.
That's kind of wild.
Uh-huh.
But I guess it makes sense.
Yeah.
Fewer products means less clutter.
Right.
And it's easier for customers to find the good stuff.
Exactly. It's like they're saying, we're not just a random assortment of cheap stuff anymore.
Yeah.
We're curated. We're focused.
I like that.
Yeah.
And maybe that's how they justify the Five Beyond items too.
Yeah.
It's like, hey, we still have the crazy deals.
Right.
But we also have these cool, slightly pricier things if you want to splurge a bit.
That's a good point.
Yeah.
But speaking of splurging, we have to talk about the elephant in the room.
Okay.
Those potential tariffs hitting in 2025.
Yeah.
How are they planning to handle that without jacking up prices?
All right. So tariffs. It's like this dark cloud hanging over every retailer that sources from China.
Right.
Remember those trade wars a few years back?
Mm-hmm.
Prices went up everywhere.
Yeah, and Five Below actually navigated that pretty well back then.
Right.
They're already prepping for this next round.
Okay.
Drawing on their experience from 2018, 2019.
So what's the game plan this time? Are they going to try to shift production to like Vietnam or something?
Well, that's definitely part of it. They're looking at sourcing from other countries.
Okay.
And their office in India could play a big role there.
Okay.
But they're also working closely with their existing vendors to see if they can, find ways to minimize price increases.
So squeeze the suppliers a bit.
Yeah.
Classic negotiation tactic.
Right.
But what about the Five Beyond stuff?
Yeah,
Couldn't they just absorb some of those tariff costs with those higher-priced items?
that's an interesting thought. It's like a built-in buffer they didn't have before. They could strategically adjust pricing on those Five Beyond items.
Okay.
Maybe even make some of them in countries not subject to tariffs.
Sneaky.
Okay?
But let's not forget about the actual products themselves.
Right.
If those tariffs hit hard, could they end up with shelves full of, like, dollar store rejects?
That's where the getting back to basics strategy comes in. They're really focusing on quality, especially for their core products.
Yeah.
Remember those $1 deals that fall apart after a week?
Oh, yeah.
They're trying to avoid that.
So better quality, smarter sourcing,
Yeah.
maybe a few price tweaks here and there. It sounds like they're doing everything they can to stay ahead of this tariff thing.
They're definitely being proactive.
But are they being realistic about the rest of the year? Holidays are coming up, and that's usually their bread and butter.
Well, they're optimistic but also cautious.
Okay.
They're actually expecting comparable sales to decline between 3% and 5% in Q4.
Whoa, a decline. That doesn't sound optimistic.
There's a catch, though.
Okay.
Remember how we talked about how they opened a ton of new stores? Yes.
Well, those new stores aren't included in the comparable sales figure.
So those new stores could still bring in a lot of revenue,
Right.
even if the existing ones see a slight dip.
Exactly.
But why the decline in the first place? Are people just not into Five Below anymore?
It's not that simple.
Yeah.
This year, there are actually 5 fewer shopping days between Thanksgiving and Christmas.
Oh, really?
It's a calendar quirk, and it happened back in 2019, too. Guess
Hey.
what?
What?
Five Below saw a similar comp decline then as well.
So it's not them, it's the calendar. That's kind of fun. But hold on, if they're being cautious about the holidays, why are they still opening all these new stores? Doesn't that seem risky?
They're still planning to open a whopping 228 new stores in 2024, but they're being super strategic about it.
Okay.
They're not just picking any random location.
Right.
They're focusing on areas with strong growth potential and demographics that align with their target customer.
So like college towns, suburbs with lots of families. Places where people are looking for affordable fun.
Huh.
Exactly. They're thinking long term, not just chasing quick profits. It's like planting seeds in fertile soil, making sure each new store has the best chance to thrive.
This is where it gets really interesting to me.
Yeah,
They're juggling so much.
they are.
New stores, potential tariffs, a new pricing strategy. It's like they're playing 4D chess while everyone else is still figuring out checkers.
I love that analogy.
Yeah.
They're not just reacting to the market.
Right.
They're actively shaping it. And that takes a lot of guts and a clear vision.
Okay, so they're bold, they're strategic.
Yeah.
But what does this all actually mean for the average person listening to this podcast? Should they be running out to buy Five Below stock?
Hold on, let's not get ahead of ourselves.
No.
Remember, this is just one earnings call.
Right.
We've dug deep into the numbers, the strategies, the risks.
Right.
But there's always more to the story.
Right. Always do your own research before making any investment decisions. But that being said, I'm kind of feeling this Five Below story. They're not just selling cheap stuff, they're selling a whole experience of vibe. And that's something that's hard to replicate.
I agree. There's definitely a unique energy to their brand. But now for the fun part.
Oh, wait.
It's time for our This Is Not Financial Advice segment, where we throw out a totally wild but maybe not so crazy trade idea based on everything we've learned.
Oh, yeah. This is where we let our imaginations run wild. So given everything we've discussed about Five Below, their strategy, the tariffs, their competition, what's your crazy trade idea? Okay, hit me with it. What's the wild trade idea brewing in that financial brain of yours?
Okay, so hear me out. We've talked a lot about how Five Below is doubling down on that super low price point, right?
Yeah.
And how those potential tariffs could actually make their competition less competitive on price.
Right, because if everyone's costs go up because of tariffs,
Right.
Five Below is already used to operating on razor-thin margins. It's like they have a superpower.
Right. Exactly. So here's the play. A long position on Five paired with a short on Dollar Tree.
Ooh, Dollar Tree. Okay.
The idea is that Five Below might actually be better positioned to handle those economic headwinds and potentially steal market share from the dollar stores.
Whoa, that's bold. I mean, Dollar Tree is a giant in the discount space.
It is.
But you're saying Five Below's laser focus on that $5 and under price point could actually give them an edge
Yeah.
in this weird economic climate.
It's a gamble for sure.
Yeah.
But remember we talked about how Five Below is being very strategic about their Five Beyond items,
Right.
using them as a way to offer a slightly higher-end experience without completely abandoning their roots.
So it's like they're hedging their bets,
Yeah,
keeping one foot firmly in the extreme value camp while testing the waters with those pricier items.
exactly. And that flexibility could be a huge advantage if those tariffs really start to bite.
Right.
They can adjust pricing, shift sourcing, maybe even lean more into those Five Beyond items
Okay.
to offset any cost increases.
Okay, I'm starting to see your logic here.
Yeah.
But of course, this is all just speculation. This is not financial advice, folks.
Yeah.
Do your own research. Consider
Right.
your risk tolerance, all that good stuff.
Absolutely. This is just a fun thought experiment based on what we've learned from this deep dive. But that's the beauty of these earnings calls, isn't it?
Yeah.
They give us a glimpse behind the curtain, let us see how these companies are thinking and strategizing.
And it makes you realize that even in a world of algorithms and automated trading,
Yeah.
it still comes down to people making decisions, taking risks, and trying to stay one step ahead of the game.
Exactly. And sometimes the companies that seem the most vulnerable,
Right.
the ones everyone's counting out, end up being the most resilient.
It's like that underdog story we all love.
Uh-huh.
But hey, that's Five Below in a nutshell, right?
Totally.
They came out of nowhere, built this whole empire on $5 fidget spinners and slime, and now they're going toe-to-toe with the big dogs of retail.
And they're doing it their own way with a unique blend of fun value and a whole lot of hustle.
Yeah.
It'll be fascinating to see what they do next.
Well, folks, that's a wrap on our deep dive into Five Below's Q3 2024 earnings call. We hope you enjoyed the ride.
And remember, even if you're not a Wall Street whiz, these earnings calls are a great way to learn about the businesses you interact with every day.
So next time you walk into a Five Below, take a moment to appreciate the strategy behind those piles of squishy toys and those tempting $25 Bluetooth speakers. There's a lot more going on than meets the eye.
Until next time, happy investing. And remember, what we discussed today is not financial advice.
See you next time on Talk Tickers.